All right, folks, I'm not sure if you've seen this. There's going to be a nonstop parade of Fed speakers this week. So, I was thinking about this over the weekend, and why has the Fed just become sort of a herd of chattering boxes? And then I discovered something. You remember that magical paper box we used to use in high school, right, to find out if someone loved you or liked you, like the girl, it was called a chatterbox. Did you know that? So the team got together, and here we put together a magic chatterbox for the Fed. So let's give it a shot, right? Okay, first question. Will the Powell Fed help Main Street? Okay, let's see what we've got here. Hold on. Let's see. I'm going to give you the answer right now. Powell has never heard of Main Street. Okay. One more. Will Powell cut rates, though? How many times will he cut rates? Okay. Depends how many times Wall Street wants him to. Okay. So now let's ask about the next Fed. Will the Trump Fed help Main Street? The answer here. Absolutely, without a doubt, Main Street before Wall Street. Okay, then if that's the case, let's find out how many times. How many rate cuts can we get from the Trump Fed? 6, 7, 8, whatever it takes to help Main Street. Main Street is number one. There you go, folks, the chatterbox. All right, let's bring in another chatterbox. Phil Blancato. Phil, my man, did you have these when you were in school?
He did, and the girl never liked me. That's the worst part about it. I kept striking out at
Did you gotta go to the girl like, excuse me, Sally?
It said you liked me, but you didn't.
But you talk about the politics going on right now inside the Fed. I'm wondering, though, in the way has Powell become a lame duck? Are we spending too much time even thinking about it?
No, I think the current group still believes in what he wants, what he's recommending. And look, they've gotten this far. They're 99% of the way through this thing. They're going to stick to their guns in that they're worried about inflation because of tariffs. And I do think they cut here, and they should be cutting at least 2 times this year to get pressure off of Main Street.
Right.
And in fairness, 3% on the front end of the curve at inflation. I'm sorry, where inflation is. And at the least, they should be at 3.5. I'm okay with 50 basis point spread because of goods pricing being a bit more expensive recently, but they're too far ahead.
All right, so NABE came out this morning and they upgraded their guidance, National Association of Business Economists. And this is really compelling. So they went up. And this must have hurt them really bad. I know those folks. They were 1.3. Now they see 1.8 this year, 1.7 next year from 1.5. And so it's interesting because they also say that tariffs are the #1 downside risk. Mm-hmm. And they also say there's only one rate cut this year. So I mean, we're in I guess does it point to a different kind of economy, like an economy, for lack of a better term, a jobless prosperity, as oxymoronic as that sounds.
I mean, you might get to a stagflationary labor market, which means we don't add jobs, we don't take jobs away. They continue to be a bit more expensive because we look at the price of wages, which I'm a huge fan of, going higher than the rate of inflation. And that means we don't add a lot of new people until we get a stronger economy or lower rate cuts. That makes some sense to me. You're seeing that in the most recent data. But remember, the labor market's at 4.2%. That's still far below our lifetime average of 6%.
Right.
So I'm not fretting about it. I like that wages continue to outpace inflation. If that continues, to their point, we're going to get a better U.S. economy next year as long as we don't get a breakdown in tariffs like we had on Friday.
What about the wealth effect, okay? Because the Friday move not just in the stock market, but also in crypto, right? Mm-hmm. Crypto took a huge hit.
It did.
We know those crypto bros out there spending money like crazy, right? I mean, could that be a sort of hidden issue? Any kind of correction in markets actually hurting Main Street more than normal, or the economy more than normal?
We saw 2 things in the data recently. One, the amount of debt added in the month of September was lower than expected, so that's a good thing. And 2, when you look at Michigan's sentiment, folks looked at it right now and said the current environment economically is better than expected, up there at 61. So what I mean, the consumer's setting itself up for a pretty good fall. And maybe we're not going to pass $1 trillion in total spending, but we're still going to do $975 billion. That will maintain us where we're at. I'm not worried about the crypto people. Remember, the boomers are still spending money. Look at what Delta did. Right. So I'm not concerned about the U.S. consumer.
But even the Delta, though, it was the premier cabins that keeps, right? So if rich folks get a ding in their accounts, particularly on the crypto side, there's some, I think, legitimate concern. I want to run through 2 things.
Let me add one thing that's very important. When you think about where we are in labor today, as long as we don't get an uptick in unemployment, and we haven't seen that, then we hang on. I don't disagree with you. You still need the rich folks to drive us higher, and they don't want to lose money. But as long as unemployment doesn't tick higher, we don't see layoffs specifically, then I think we're okay.
Earnings season, banks kick us off, but regional banks are looking a little worrisome. Mm-hmm. Are you concerned?
So, I'm going to get on my soapbox for 1 second. I am very sad about what Dodd-Frank did to regional banks. We got through the issues of the two big banks, JP Morgan, Silicon Valley, that stuff, and they survived. My problem is at the core of American capitalism is regional banks who loan money to small companies that are going to become the bigger company. And we haven't had enough of that. That's why small caps are struggling.
They should have never been under those rules.
They went way too far. But right now you're looking at, remember, net interest margin, the amount of money they make on cash, is still pretty elevated for them. So that's helped them a little bit. Not as big as the big banks, but enough to survive. I think we're on the precipice of lower rates, and if we get lower rates, the regionals will be just fine. I don't get any collapse in there, but we need regional bank growth to get GDP growth north of 3%. Those two go hand in hand. If they don't happen, we don't get it.
All right, we've run out of time, but I'm going to share with the folks. You like Visa, Microsoft, and Pepsi here.
Very simple, all good quality names. Dividends, Microsoft cheap, and Visa, just for fun, 57% margin. Where do you get those kind of margins? Mag 7, just saying.
All right. Good seeing you, my man. Appreciate you.